Okay, so pretty intriguing thumbnail, don't you think? But couldn't we really save a client $300,000 or more by just choosing the right loan program? Well, let's get into it. All right, so what we want to do is go to my breakdown, and I'm going to show you nothing but the facts. So we go to here, how to save over $300,000 by choosing the right mortgage program. So let's get into the backdrop. What's the scenario behind this transaction? Well, we have a $1 million purchase. The client has a 628 credit score, and they were basically looking for the lowest down payment options that's available. And the property is located in a high loan limit county in California. Okay, so that's the backdrop of what we're looking at. So the options we have are, the first thing that most people would think of is a conventional loan or a jumbo loan. That's a great answer, but that's not the answer. Okay, so why? Well, conventional programs in this scenario do not come with a 3.5% or 3% or less down payment option. They start with minimally 5% down. Okay, so we have 5% down. The mortgage rate, believe it or not, because of the credit score, the loan amount, the down payment, and so forth, is 5.625. Okay, I haven't seen 5% since probably 20 years ago. All right, the principal and interest payment of that would be $6,380. And then because you're not putting down 20%, you would have to pay PMI, and that would come out to $1,124, making the total payment here of $7,504. And you can note down here, I put a notation down here, that I'm only going over the principal, interest, and the PMI. I did not include in these figures homeowners insurance and your taxes because they would equal on either loan that you'd be looking at. Okay, so that's the conventional backdrop. So now let's get to what other options are there? Well, FHA. Well, the first thing you guys might think is FHA? I don't want an FHA loan. Well, if it saves you over $300,000, you would. Okay, the reason being is you can do a loan with only 3.5% down on this program. Yes, 3.5% down, but I don't want to deceive you. So I want to make sure we're comparing apples to apples. So we're going to look at the 5% down option when we're looking at FHA. So on the FHA program, we would have 5% down, just as we did the conventional. The mortgage rate would be 4.125. Okay, that is the biggest thing that we're looking at here, as well as the PMI. So a lot of times what I do say is I always say, you know what, let's compare all these options. And FHA is not a bad loan. It's a very good loan for anybody with lower credit scores. I'm not saying terrible credit scores. I'm saying just lower credit scores. And this is a perfect example. So in this, again, we have the rate at 4.125, putting the payment, the principal and interest payment, at $5,514. The PMI payment on this is $784, bringing the total payment to $6,298. Remember, again, this is 5% down. You can still go with the 3% down option, and your payment, it would still be much lower than the conventional. So let's get over to the comparisons. Okay, what's the difference? We're going to compare only the 5% down programs because it's not fair to compare the two because conventional doesn't even have an option for the 3.5% down. So the conventional total payment would be at $7,504. The FHA payment would be $6,298 for a monthly savings of $1,206. So the first thing when you click the thumbnail, you're probably thinking, oh, nice clickbait. You didn't think that I would actually back everything up with the facts, which I did. So that's one of the tools that we have here at the Rate Update with Dan Frio and the Frio team. We not only make sure you get the lowest rate in the industry, the lowest fees in the industry, you're placed in the correct loan. So to find out more about us, please visit therateupdate.com or give us a call at 844-775-5626. Thank you so much for watching. If you find value in my channel, please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Looking forward to hearing from you. Take care. Bye-bye.